Hello, ladies and gentlemen. This is your teacher Osman Lee, and we are discussing exercise 518 solution, which is regarding the preparation of a cash flow statement. Now, if you have not watched the video on the basics of the cash flow statement, in which I have discussed the classification of a cash flow statement, and then what type of information you need, and what are the rules of cash inflow and outflow, so I would request you to pause the video and go back and watch that video first, and then come back and see the solution of this exercise. Now, 2 years balance sheet information is given to us. That's the beginning of 14, which means the ending of 13, and the ending of 14 is also given. We are required to prepare the cash flow statement for 2014. The third column is actually just the increase and the and decrease, okay, that has occurred during the year. Information on net income, dividend, and equipment is also given to us. Okay, so what I have done is I have just copied this numerical and I have pasted into my Excel sheet so that we can have a simultaneous look into the question and the solution of the numerical also. Now you do know that we had to write the name of the company, the cash flow statement, and for the which year you are preparing. Then we have these three sections in operating activity, investing activity, and financing activity sections. Actually, operating activity starts with the net income. By the way, we are actually preparing a uh, indirect cash flow statement. Okay, so we always start with the net income in an indirect format of a cash flow statement. What is the net income for the year 2014? The net income for the year 2014 is $44,000. So we will write it here. And now we will adjust the income with any changes in the working capital or any changes in other special kind of events or non-cash transactions, you can say. Okay, now working capital is related to current assets and current liabilities, so we would first go for the current assets if there is any changes in the current assets. Now the first current asset that we have in the question is cash, $20,000. We do not consider any change of cash here in the operating activities because the sole purpose of the preparation of the cash flow statement is actually the cash, so cash is not considered here in the operating section right away. Okay, then the next account that we have in the current asset is account receivable. Our account receivable were $88,000 in the previous year, or you can say start of this year, and it increased to $106,000, which means there is an increase of $18,000 in account receivable. So we have experienced an increase in account receivable during the year. Now you do know increase in asset is a cash outflow based on our basic discussion of the cash flow statement. So we will write cash outflow of whatever the quantity has increased. That's 18,000. If you can see here, 1,06,000 minus 88 is equal to 18,000. Then we do not have any other current assets because after account receivable we are given the equipment is a long lived asset, so that's it, the current asset discussion is finished. Then in next part of the working capital is the current liabilities. So we have a current liability by the name of account payable. Yes, account payable were $15,000 at the start, and it ended by with an increase of $5,000, okay, and ended on $20,000. So we have an increase in the liability, okay, or account payable. So we have experienced an increase in the account payable of the company. Increase in a liability is a cash inflow, okay, you know that. So we have this. Now account receivable and account payable, both of them are related to any possible change in the working capital. If we are given here inventory or any other information related to current assets and current liabilities, we will write after it. If not, then we will move to the second part of the adjusting operating operations or adjusting the income, which is the adjusting the other special events like non-cash transactions if we have any. Okay, now what type of non-cash transactions we are looking forward if there is any profit or loss, gain and losses due to sales of assets, okay, or if there is any depreciation during the year, because that is a non-cash expense. Actually, if there is any amortization expense, so we will look forward for that. Now we are only given a net income information, okay, from the income statement, so we do not have any what you can say amortization or any gains or any losses, okay, from the sales of an asset. But obviously if we have equipment, so we have depreciation every year. So one of the technique of knowing depreciation is you can go to the income statement of a company and take it from there. If it's not given, then another technique is that depreciation is actually the difference of the accumulated depreciation of last year and this year. Like when the year started or the last year, the accumulated depreciation was $11,000. Now this year ended, so our accumulated depreciation is $17,000, which means there is a $6,000 increase in the accumulated depreciation of the equipment. In other terms, we can say that the depreciation expense for the year 2014 was $6,000. Okay, now you do have watched the basics of the cash flow statement. So we said it there that whenever we have depreciation expense, one, it is a non-cash expense, and since it is a non-cash which was already subtracted in the income statement, so we're going to reverse that to adjust it. Adjustments are actually the reversal of that. So if it was subtracted in the income statement, we will add it here in the cash flow statement actually. So this is the non-cash expense that we have. Okay, other than that, we do not have any amortization because I don't see any amortization, or this is the whole numerical I have. Okay, so I don't see any amortization information. I don't see any gain and loss due to sale of any property, plant, equipment, or securities, common stocks, or these kind of things if you have sold it. Okay, so that's it. We do not have any other information remaining. So what we will do, we will actually do the calculation of that, and the answer of it would be called as net cash flow from operating activities actually. Okay, so we will auto sum it. In the auto sum, the minus $18,000 will already be adjusted, so it would be like 44,000 minus 18 plus 5 plus 6 is equal to 37,000. So that's the part of the current operating activities. Sorry. Okay, operating activities comprises of any change in working capital, which means current assets and current liabilities, and any change in the the special kind of events like gains and losses and amortization and depreciation, non-cash expenses. Okay, the next section is in investing activities. You know that investing activities are related to the long-lived assets or non-current assets. So let's see if we have any non-current asset information. Yes, we do have equipment. Equipment were $22,000 at the start of the year, and now equipment worth $39,000. It means the equipment of this company has increased by $17,000. In other words, we can say that the company has purchased more equipment for their business. Okay, how much worth of equipment was purchased? $17,000. So we can write here that okay, we do have experienced increase in the equipment. Okay, and how much increase is there? 17,000. Increase in equipment or increase in an asset is a cash outflow because we need to pay money for that. So it would be a cash outflow of minus $17,000. Okay, then let's see if we have any other non-current assets. So after this, we have this accumulated depreciation of the equipment, which is already recorded here. We don't need to duplicate it. So that's it. We do not have any other information remaining here. So this is the equipment that we have. Okay, so we can, at the end, we can calculate the net cash flow from investing activities. Okay, and how much net cash flow we have from the investing activities? We have a net cash flow of minus $17,000 or cash outflow. We had a positive inflow of there. Okay, I can delete these extra lines as well, extra rows. Okay, now so we got our operating section. Okay, and we got our investing section. Let's go forward for our other ones. Okay, so the next one we have is the financing activities. In financing activities, if you remember, we consider long-term liability. Okay, because current liability was already considered in the operating activity, so we consider long-term liability in the financing activities, and we consider the whole of the equity, means the total of the equity there as well. Let's see if we have any long-term liability. So we had account payable, which was current liability, already accounted for here. Okay, and then after that, right away we have common stocks. It means we do not have any long-term liability to write in the financing activity. Okay, so if we look into the common stock, so our common stocks were $80,000 and it has increased to $1 lakh. It means more common stocks were sold. If you're selling more common stocks, so more money is coming to your company. Okay, so it's increase in equity is called as a cash inflow. So we have experienced of increase in common stocks. Okay, how much increase in common stock we have experienced? $20,000. Okay, so we will write it here. The next equity item that we have is retained earning. We had an increase of $11,000 retained earning in the past year. Now we do not account retained earning here. Why we don't do it? Because what is retained earning, or from where retained earning comes? Retained earning comes actually from the income of every year. So this $11,000 increase that we had, this has already like from the income. So if I write like 11,000 here and then the income is already written, so it's kind of a duplicating my income. So that will be exaggeration of my income actually. Okay, so we do not consider this retained earning in preparing the cash flow statement. Okay, so that we have only the common stock. But then we had some additional formation regarding the dividends, that the dividend of $33,000 were paid. If you are paying dividends, one, it is a cash outflow, and then the dividend is a if you are paying dividend, then it is related to the financing activity. Okay, based on our basic video discussion. Okay, so I will write it here. Dividend paid. Okay, how much dividend is paid? $33,000. So I will write there $33,000 cash outflow because the dividend is paid actually. And then the new equipment was purchased and none was sold. So we will have this net cash flow from financing activities. Okay, what will be our net increase and decrease from our financing activities? Minus $13,000. Okay, because 20,000 minus this would obviously gonna like. Okay, so we got actually our net cash flow from operating activities, net cash flow from investing activities, and net cash flow from our financing activities. It's the time to calculate the net increase or decrease in the cash, or you can say net cash flows also. You can write there net cash flow during the year, which is we are considering 2014 here. Okay, so the net cash flow is actually what? It is the conclusion of whatever we have a net cash flow in operating activity plus whatever is the answer of our investing activity and whatever we have in the financing activity. So overall $7,000 cash has increased during 2014. Okay, so that's during 2014. How much cash was there, or what was our cash balance at the start of the year, or you can say at the beginning of 2014? So we had how much? If you see here the balance sheet of the company, cash, and it's written 1st January 2014, which was the beginning of the year. We had $13,000 in cash with us, so I will write this $13,000 here. And during the year we had 7,000 more, so 13,000 was already available and 7,000 cash was more created. So if I plus them, we get a net value of 20,000. Okay, and we can say that this is the what you can say cash balance at the end of year, or ending cash balance, okay, of year 2014. Okay, so that's actually the whole purpose of solving our numerical, because we wanted to know that what is my net cash flow, what is my overall cash balance actually, and it can be cross verified from here as well, that our answer here is $20,000, which is our cash balance at the end of 2014. If you see here the end of 2014, we also had $20,000. It means that our calculation is also correct. Cross verification is there actually. So ladies and gentlemen, this is how you prepare a simple cash flow statement. The exercise was exercise 518. I hope you got the basic concept of the cash flow statement. Thank you very much, ladies and gentlemen.